All right, welcome back, guys. So we are back on Euro USD. Remember yesterday we talked about this fair value gap, right? We talked about this fair value gap yesterday, and I told you guys that this fair value gap has low chances of holding. Then I said if anything has to hold, then it will be this one, right? And price came beautifully inside it and then pushed right up. So at this moment in time, when price came into this fair value gap right here, so what we could do is that after this push, to the upside, that was 8 a.m. We could go down to our 5 minutes time frame and then we'll look for an entry, right? Look for an entry. Our entry model is fair value gaps going in and fair value gaps going out. So this is it. This is 750. Yeah, fair value gaps coming in and fair value gaps going out. So we would have gone down to our lower time frame and look for our entry right here. So if we look right here, you see that price came into this order block the first time, and then 8 o'clock it started rejecting at 8. It started rejecting at 8. See the rejection, and then it closed right here. So it closed right here, 9 o'clock. So what would have done is that after 9 o'clock, would have come here and then we look for the most recent fair value gap that was going higher, right? So this is it. This is the most recent fair value gap. So we would have either entered here, our long position right here, or would have entered would have entered right here. But if you would have entered here, you I normally just enter at the creation of the fair value gap, like right here. I normally just enter like that. So our target would have been from the down here, but for beginners like people who really do not know this trading module, it's always good to put your stop loss right here. But normally what I do is that I just place my stop loss right here because if price to like start retracing downward, there is nothing down here that is gonna hold price not to maybe sweep out this low before continuing higher. So I just normally just put my stop loss right here, and then my take profit is just 1 to 2 R, and that would be my take profit right there. So it would have been a beautiful trade. So even if you would have placed your stop loss right here, I believe that you still would have been profitable. You still would have made money out of this trade, like chasing 1 to 2. So you would have hit profit right there. So it would have been a beautiful trade. So even if you would have taken your trade right here, right, and then your stop loss is right there. But if you are taking a trade here, your stop loss was supposed to be here, right? Your stop loss was supposed to be here or at this low right here. So if it's here, you still would have enjoyed the ride up. Still would have enjoyed the ride to the upside, right? So I've enjoyed the ride to the upside. Let's see. Yep, you still would have enjoyed the ride to the upside. That's 1 to 3. Let's just bring it down here. So that is your 1 to 2. So you still would have enjoyed the ride up here. So the 1 to 2, with this 1 to 2, it's showing us that it's price is rejecting, right? It's coming down. But we don't have to worry because as price has decided to start going up, then this is our target. Remember this target, right? This high, right? This high is our target. So we are moving upwards to take out this high. So we are still safe, right? Our take profit is still very safe because this is our target up here. So if you go now to the 1 hour, let's see what the 1 hour is saying. All right, if you go down to the 1 hour, let's just delete this entry box. If you go down to the 1 hour, you will see that price, the market gave us this fair value gap and we traded into it. And we're not getting any rejection yet. We're not getting any rejection yet, and we are still not creating any fair value gap going lower. It's still okay because price is just merely reacting to this fair value area, this fair value area. Price is just reacting towards it. If you can see, you'll see that price is just reacting towards it. This is the area. In fact, price is trying to retrace back into this fair value area. This is it. Price is trying to retrace into this fair value area. So when price stinks into it, it will continue higher. The reason why I did not put this box following the highs of this candle. I did not follow the highs. I instead followed but the candle close and candle opens is because when marking out um, when marking out a fair value area, it's always good to like mark out the bodies, the highs of the candles, right? It's always good to mark out the highs of the candles. If sorry, the highs of the candles, if the highs of the candle the it's corresponding to a fair value gap. Like if the high, let's just cancel this fair value gap right here. If this high was, let's say, right here, right? If it was right here, if this high was right here, then I would have marked out the high like this. But since it is not up here, it is not corresponding with this fair value gap, then I am to mark out the bodies. To mark out the body. So until price gets here, we are not looking for any bullish prices because price to balance this price action, price needs to trade into this fair value area, right? Price to trade into this fair value area before continuing upward, continuing up to or upward to the upside. So now we are waiting for price to trade in here. Then we look for our rejection before we can go down to the lower time frame to then start targeting this high right here, this high right here. So if you're trading the euro USD, you should be waiting for price to get into this fair value area, then give you this bullish rejection. Now what you need to understand is that if this candle get inside of this box, what you need to wait to see is a disrespect candle, right? A bullish disrespect candle going out of the box or trading above. If you do not get this rejection, do not do anything else until you get this rejection. You wait for the rejection to close. When it closes, before you can then go down to your lower time frame and then take your entry. You understand? Before you can then go down to your lower time frame and take your entry. So that is how the entry model works. So stay tuned, guys. This is Ojini Currency, and I do videos like this all the time. If you don't understand anything, you can watch my previous video. I share my trading analysis like this, and I really want you guys to correct me if I'm wrong. If you have any correction or making any mistakes, you can always point them out. I'm here to learn, and this is me documenting my trading journey on YouTube.